Yo, 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 what's good, people? It's currently 3 minutes past 8 p.m. UK time. Let me just share my Zoom. Alrighty, alrighty, alrighty. Let's just make sure everything's working on the tube of views, and then we will
Uh,
get started.
I haven't got a notification off YouTube yet, so
We'll get
I
started.
normally get a notification to say it's gone live.
It's working, it's working. I've just went on YouTube via Shuriken Sounds. All right, the sound is working. Amazing. What's good, people? It's currently 3 minutes past 8 p.m. UK time, Monday, the 27th of November, 2023. Bitcoin has been holding up 30K plus levels for over a month now. I think since like the 22nd of September. So very, very
How
exciting
long it's
times in the
been?
market. Huh?
How long it's been? Over a month.
Yeah, yeah, because I made large investments on the Sunday, the 15th of October, and then the market boomed like 1 week later.
Mad.
Yeah, the market was super low on Sunday, the 15th of October, and it was literally 1 week later. So yeah, we've been holding up on these crazy high levels for over a month now. But do you know what? This is actually similar to what happened in June. Do you remember? Like it just the price just wasn't pulling back, wasn't pulling back. Then eventually it did.
Um,
So
I
anyway,
can't remember.
so this is a free weekly webinar that we've been running every single Monday, 8 p.m. till 9:30 since summer 2020. So if you would like to come to our free weekly webinar, go to blockchain.sensei on Instagram. Make sure you spell blockchain and sensei correctly because lots of people like to impersonate us and try to steal your money. So be careful. We would never ever, especially via Instagram, ask any money off you. So go to instagram.com/blockchain sensei, click the link in our bio. You'll be brought to this link here. We stream Mondays, Fridays, Sundays, 8 p.m. till 9 p.m. You join the Zoom here. You can join our WhatsApp group and you can also join our Telegram group. You can even get a 30-minute free AI consultation with Keish. And then you can also click here to get to our YouTube, where you will find over 400 hours of financial literacy, blockchain education, and in recent times, AI education, as we seem to be doing more and more. Um, Jay Johnson, who is the head of artificial intelligence and chief technical officer at Shuriken Sounds, one of our subsidiary companies, did a talk on AI prompts representing blockchain sensei, of course, at Surrey University. I think this is definitely something you guys want to check out. Because to everybody that came to Game Ball Rally, that was absolutely legendary. We had one of the best industry speakers ever when it comes to the gaming industry. Somebody who's worked at Activision Blizzard, was EA Sports' first ever um um intern. Yeah, and he is a big Web3 enthusiast. He's literally this guy over here. So yeah, so that's how you join the webinars. Check out the YouTube. We have university degrees worth of education, dare I say it. But that's not advice. That's just my opinion because I don't know anything. This is why it brings us to the disclaimer, terms and conditions. Okay, so before we get into this week's webinar on tokenized assets, let's go through the disclaimer. So, disclaimer, terms and conditions. All content is for education, information, and entertainment purposes only, and it should not be considered as investment advice or a recommendation to buy, sell, hold any assets, nor place any trades. Please always do your own work, guys. Yes, sir. Our content is intended and should only be used for informational use only. It's very important to do your own analysis before making any investments, which should be based on your own individual circumstances. Um, you should always take independent professional advice from a professional advisor. Mr. Hardin, Keish, anyone in the room, any financial advisors? Or independently research? Hey, shout out some. Do you remember that guy in Money Jar? he's friends with like Pokey Banks, and he was at that event. Yeah, he's recently become a financial advisor. He's recently passed. Say again? He posted it on Instagram. He said, I'm officially a financial advisor now." So yeah, I spoke to him over DMs. He follows Blockchain Sensei, so yeah. Because him or independently research and verify all and any information you may find in our show that you may wish to rely upon, whether you wish to make an investment decision or otherwise. All investments come with what, guys? Risk. So do your own research. Neither myself, Keish, or Mr. Harding are financial advisors. We do not intend to be perceived or received as financial advisors. However, we're working in collaboration with several accredited financial advisors. If you are unable to mitigate your risk, please let us know immediately so we can refer you to an accredited financial advisor.
Boom.
Right
Yo,
then.
yo, yo, yo. Before we get into it,
Yeah.
check the website, share the screen.
Okay, no worries. 1 second.
Now, obviously, let's not credit our actual website designer for this one.
Okay. Okay. What happened? What did you do? Accredited Web3 courses delivered by. Oh my god! Nice. Oh my god. 15% off all products use BC. Oh wow. Okay. So what happens when you click on this screen? Oh, that's nice. These guys have accreditation, right? There we go. They've got that special thing where you're accredited and you get the piece of paper and that. Obviously, we don't really award papers at the moment, but yeah, that's good. All right, all right, all right, all right, all right. Yeah, it's looking a bit professional. I like it. Yes, yes, yes. That was a live reaction, guys. That wasn't planned. Me and Keish had no idea.
Yes,
That's hot.
I'm a designer.
There you go.
Designer. By the can I tell them about the videos? About who does the videos?
No, no. Who does the videos? No one knows. That's a
Okay.
secret.
Okay, cool.
Yeah.
Cool.
There you go.
Anyway, let's go to this report.
Let's
Yeah, this
go.
report right
This
here
report's
is we see
crazy.
one man. What I like about this report is juicier than that dry pizza Michael's eating, and
Bro, could you see how dry it was?
bro, it's dry.
Can you tell something's dry over Zoom?
Bro, I'm a pizza connoisseur. This them ones where you gotta put it in the pan with water and steam it.
Okay. I left it in the oven for too long, okay?
So I'm old cook the pizza.
You gotta steam it. You gotta steam it on a frying pan. That's the best way.
Yeah,
Anyway,
don't flop
we're
this
getting a
one.
bit too technical now, but basically, this report, yeah, I gotta say, this report is a lovely report to go into because it's gonna really, if it's gonna give you one thing, it's gonna give you perspective, right? Because there's a lot of people in the space that say they know about the tokenization of the tokens and stuff, but when you really, really delve deep into it and you actually understand the differentiations and have a deeper understanding of the levels in the game, then you'll know what you're actually risking and what you're actually getting into. So we're going to get into that today. So yeah, it's a deeper one, I must say.
I'll do first 10 pages. Go on.
Go on, son.
Pull up the thing.
Who's sharing? I don't mind sharing it.
No, go on.
All right, cool. Give me 2 seconds. Let me just download it. Take 2 seconds. Oh, share my screen. Could you make me co-host, please, on Quiche without
Yeah,
the
bro.
camera?
Come on.
Oh yeah, like that.
Come on. We're prepped
Oh,
like that.
appreciate it. We're here. We're here.
Okay.
Let me slap this zoom in here with it. Of course, for those who don't know, first of all, obviously, quick blockchain sensor advert, right? If you don't know how to find the game, right, and you found it on YouTube, you're watching it, all done. But if you want to know how to actually join us, click right here and you get in our Zoom, right? This is how I made it in. How did you make it in? All right. Anyway, enough advertising. Cool. Let's get into it. Let me know if you guys can see it well. Is this good?
Yeah, you got an echo though, bro.
You know what? I know why. I know exactly why.
You got hella echo.
Yeah, I think it's because I'm on a device thing. You know what? Is the echo echoing now?
Yep.
All right, Keisha's off camera. How about now?
Nope, it's working now.
Sweet.
Alright, cool.
Good. All right, cool. So this one's
So this website, we're gonna go into this website after we go into the report because I think the website actually has the craziest alpha. Like,
yeah, 100%, 100%.
This is how deep it is, guys. I read this report in the middle of the night one day, and I pulled it up, and I went on the website, and I just had to message all the boys and go, "Yo, guys, deep this a second."
Yeah,
And then I just had to call them and go, "Guys, look what I just put in the group." And then we all just was like, yeah, this is a bit mad still because people
before
aren't
we
even
get into
realizing
this report,
there.
right? One thing I must say is, if you guys are not connected with these individuals, right? I don't know what's wrong with you, man. 'Cause I can't lie. I've got every single one of these guys on my LinkedIn now. All right,
Jeez.
so that you know. Anyway, let's
Big dog.
actually get into it. So,
Right,
what
cool.
is this report about, Mike?
The report is actually about a spectrum of tokenization. So this is when you know they're coming with the big weight because they're not even just talking about one project tokenizing. They're talking about how people might think that they're getting a tokenized asset, but they're not actually. And what is tokenization? Is taking real world assets, so stocks, property, bonds, gold, and putting them on the blockchain. Now, if you know anything about what that's going to do to the markets, then just think about it. Every asset on the planet can be tokenized, which is pretty crazy. So what they've done is they've created a framework to understand which assets fit where and in which ways this can be done. So that's what we're going to do. We're not going to go into the details of every word. We're just going to go glance on each page and give you a bit of a summary breakdown and break it down for you. You know how we do. You know how we do. So this first page is basically highlighting what I just said. So let's go to the next page. Next page, I think, is contents.
That's what we're going to go through. And then here we go. Let's get into it.
And it's a very easy, light read as well, you know. Even if you don't understand it, you could read it and just read the pages. Because there's only like probably 10 pages of actual words. The rest are like contents pages and stuff. So basically, one of the things they're saying that's going to be a big factor in tokenization of real world assets is obviously the different legal jurisdictions. So depending on where the asset is, depends on how it can get tokenized. Depending on where you are, depends on how you can purchase this tokenized asset and what's going to happen. So what's going to happen is who's going to be affected by this? Banks and technology providers and the investors themselves. So let's keep going down. So the spectrum of tokenization. So we're going to go over this and try and make it as simple as possible. So it's broken down into off-chain, which is what's happening at the moment, hybrid, where it's a bit of both, and then on-chain. So what do we have? We have the ownership. So is the ownership on-chain or is the ownership off-chain? It means you got a physical piece of paper or keys. Is the value transfer off-chain? So does that mean you're handing over a physical pair of keys or handing over a physical piece of paper? Or is the value transfer on-chain because you're just doing a transaction on a blockchain? So that is what makes up the spectrum. So let's go for an example. So completely off-chain is buying a house right now. You get a piece of paper, and you give a pair of keys to somebody, and now they own the house. Well, the bank does really, but you know what I mean. And then then on chain.
If you want, just go back on the game a couple weeks back, and you know exactly what we're talking about.
Yeah. Whereas on chain would mean that the assets are on chain, so the house is actually the assets have fully been tokenized, so it's on chain, and then you would receive the deed to the house into your wallet. So that would be a fully on chain tokenized house. Whereas what's going to happen is there's going to be a mixture of the two, and that's what this is saying. So let's move it up to say model 2. Wait, let's go back. So this would be on-chain representation. So this would be where the house or the gold or whatever it would be represented on-chain. So you'd get a token for the house, or you get an NFT for the house, or NFT for a bunch of gold. But then the value is exchanged via PayPal. Yep. So off-chain. Then you would have the opposite side. So this is now on-chain integration, and this is where assets are represented on-chain, but the exchange can be done off-chain or on-chain. Yeah. So that would be we've got a house, right? And we tokenize this house, and we turn this house into an NFT, and then you can buy my house with your wallet. And then, as we said, fully on-chain would be where the whole process happens on the blockchain. So hopefully we broke down that super complex thing for beginners, just like we do at Blockchain Sensei.
Cool.
So page 8. So they believe. Go back to that one. Believe. Yeah. So they believe that the most financial relationships and thus assets will be poised to transition from a conventional to on-chain means. However, certain relationships may not be feasible, such a fully on-chain dynamic due to specific restrictions on the spectrum. So what they're basically saying is it would be ideal for all of these for all assets to be able to be purchased on-chain, because right now, if you're buying a house, sometimes you can't move in on or buy the house on a Saturday or a Sunday.
Yeah.
Because it's closed. Whereas this would mean that it's 24 hours a day, 7 days a week. Now, if you go and talk to anybody trying to sell a house right now, sometimes people are waiting 3 months, 6 months, 9 months to sell that house.
Yeah, exactly.
What if you have just lost your job and you really need to sell your house? You need the money. What then?
Even depending on what country you're in, and there's some people that have been waiting a couple of years.
Exactly. So it's a difficult situation. So everyone's told, get a house. It'll be a great thing. It'll be the best thing you ever do. Not only are you paying more interest, well, for some people, not everybody, some people get great deals, but some people end up paying more interest on the house than the actual house. And then when they actually want to sell what they've got of the actual house, they can't. They're waiting for years. So that's where tokenization will help with that, depending on the legal situation involved. Cool.
Yeah.
So let's go to the next slide. So a visual aid for the spectrum of tokenization. This is basically what we just spoke about. So either their assets are on-chain or the assets are off-chain. We've basically just spoken about this already. This is just another.
Yeah, it's exactly the same diagram, but just broken down with the different models branched together to give you a little bit more of an understanding of how the on-chain and off-chain parts can merge a little bit better. So yeah, cool.
So I even think this is going to apply one day. You see eBay? You see the entire eBay website? You see the entire StockX website? This is going to happen. You see Pokemon cards? They're going to get traded on-chain. But I think what will happen is there'll be a representation for them. They'll be like a hybrid one. So you'll have your Pokemon card in your house, and you'll be able to trade it on-chain, and someone will be able to trade against it or whatever. But then you will actually have the physical one, and you'll have to actually send the physical one to somebody.
Yeah.
I think it's going to be a case where people will have the ownership deed to an asset, but someone else can hold the physical asset, even though they don't physically, they wouldn't technically own it.
Well, then I think that there'll be banks or locations where people can vault things and do exactly what you're describing.
Transfers. Yeah, definitely. So Model 1, status quo, which is what's happening at the moment. An investor purchases Apple stock directly from the Nasdaq Stock Exchange. So there's no chain involved here. This is exactly what happens at the moment. So let's go to number 2.
Wait. You just totally skipped that. Wait. There's a good point. Go up. And then, so the next assets to hold off-chain stockholder brokerages to ownership rights of position value. Oh, never mind. Sorry. I thought he was explaining how Apple stock would exist on-chain.
Oh, no.
No, it's not on chain. This one's just via the Nasdaq Stock Exchange. So they issue it and then they pay Apple, and Apple then issues the actual stock itself. That's what it says.
But
Yeah.
talking of Apple stock on chain, it is possible through a company we interviewed before called Swarm. Go and do your own research into them in your own time.
Yeah.
So let's keep on going. So off-chain, hybrid, on-chain. It's a bit of a hybrid one. So an investor purchases shares of Franklin Templeton's on-chain US government money fund. You know, US government money funds and the US government are anti-blockchain. It's funny that, isn't it? But
right, makes sense, right?
But yet they've got government money funds on chain. So that's
Funny.
Strange that.
Funny.
Okay. So yeah. Anyway, that's like me being anti-chocolate, but having this.
That's Toblerone. Oh my god, it's been so long.
And it's already open. It's already open. This is what they're doing. We're not interested in it, but check out what we've got. It's already open. We're already doing it. But we're not interested in it. We don't think it's good. That's what they're saying to you. So
exactly that.
Yeah. So yeah, basically what happens is the money fund is represented on chain, and you can see it on chain. You can see the transactions on chain. However, the ownership rights and the shares are represented off chain. So they're just using the on chain metrics and the blockchain to speed up the transactions and to allow fractionalize.
And this is exactly what happens with your USDT and your USDC. It's backed by physical dollars at a physical location, but on chain it's represented, and then off chain is physically counted for and put back. So this is how, for example, a stable token like USDT is done.
I don't know how much actual cash is represented on USDT.
About 70%.
That's a whole other episode we'll have to go into.
Yeah. Yeah.
That's a sticky one.
Yeah, I could pull up some stories on that.
Yeah, bare sticky. You know when Drake goes, "Look how sticky it gets."
Yeah, so there's model 3.
Okay, so model 3, the way that this is now working is on-chain integration. Integration. So this is basically now the investor deposits USDC, which is a representation of the dollar, into the new Silver Series 2 Senior. It's just a long name, right? So this is basically a pool. And what is a pool? It's a place where people put tokens to allow for liquidity for some other people that want to buy or purchase something. So let's say, for example, let's try and break this down. Let's try and do a madness metaphor to break this down for people. So a liquidity pool, let's say, we've all got let's use Toblerones again, yeah. All right. So here's and let's say there is somebody that wants to buy some Toblerone, but he wants to buy 2 bars of Toblerone, but there's only 1 bar of Toblerone in the shop, in the marketplace. So what would happen is other people, I would go to Dom and go, "Yo, Dom, you got any Toblerones?" Dom goes, "Yeah, I got 10 Toblerones." I'm like, "Yo, if I can borrow your 10 Toblerones, I will. If someone asks for one, I'll give you 1 extra back." Yo,
Yeah,
Keith,
because what
how many Toblerones you got?
I got 10 Toblerones as well. You know what? You know what's gonna happen with those Toblerones? If they're all gonna get aggregated into one big bar Toblerone. So when anyone needs the Toblerones to transact, if that one person wants that one Toblerone and they want to get more, then what's gonna happen is that they're gonna pay the fees, right, for that
Okay.
transaction. And those fees go where? To me
Okay.
and Dom.
Okay. That
Boom,
makes
boom,
sense still,
boom.
because you are providing the Toblerones that people want to buy.
Exactly that. So I'm earning a yield from the fees of the
Okay.
transaction by facilitating the funds for the transaction.
Okay. There we go. So that,
So
in a nutshell, is liquidity pools explained with a Toblerone bar.
there you go.
Yo, you show me anybody in Web3 doing that. You show me. Clash them right now.
Yeah. Where's the sponsorship, Toblerone? What's going on?
Yeah, Toblerone owes the sponsorship. Centrifuge owes the sponsorship.
Send it. Whoever's from there listening to this, send it our way. Send the contract.
Come, Toblerone. Anyway, Toblerone getting bare ad space right now.
I know. Okay, let's stop.
So anyway, so that's how it works. And then these tokenized receivables refer to off-chain receivables representing the collateral, which we just spoke about. While smart contracts may be used to execute aspects of the transaction, asset ownership rights are still fully developed, managed, and represented by traditional off-chain means. So all of this stuff's happening on-chain, but the actual asset is still developed and managed and transacted, and complete ownership is done off-chain. So let's go to the last and final example.
Just fully on-chain. Oh no, this is a continued. Well, hold on. Here you go.
Yeah. So on-chain enforcement. Now this is where the ownership happens is fully on-chain and the value transfer is fully on-chain. So this is where it's a complete blockchain model for assets. So this is where it gets a bit crazy with the DeFi things. Anyway, so let's scroll down, and we're gonna get into the DeFi things that are going on in this space in a second. So there are more examples of Model 4 transactions emerging in crypto-friendly jurisdictions. For example, Anemoy, you might want to write that one down. Anemoy, yeah. Let me just open that as a tab for myself.
What do you think just did?
Let me just get this one right here. All right. Okay then. All right. Okay. So Anemoy offers sophisticated private non-US investors access to US Treasury bill yields for a regulated approved fund structure. In this example, local law permits for tokenization of fund shares such that investors hold tokens instead of fund shares with the same rights. So basically, they are doing exactly what we've been calling for a very long time, and that is allowing people to have US Treasury bonds, but get the yield of a bond in a token.
Yep.
Because that is more attractive to people than getting bonds because the normal way, because it's just not sexy. Whereas doing it in tokens, it's the exact same thing, but it's just done in tokens, so people find it more attractive. Now, the reason why it gets a bit more interesting with tokenized bonds in comparison to traditional bonds is because now you can do DeFi plays. So you can take them tokenized bonds and you can put them in a mixer pool with other tokens and get higher yield than you would do normally. You can do all sorts of crazy stuff, but that's
I wouldn't put it in a mixer. I wouldn't put it in a mixer.
Not a mixer, the wrong terminology. I apologize.
That's how you get put in jail.
You definitely don't want to put it in a mixer. Wrong word.
But yeah, you can earn your yields by putting it in a pool, and you can stake that, trade that, flip that, extend, expand that, all of that good stuff.
But if you want lessons on extreme DeFi, that's a very expensive lesson. I'm going to tell you right now. That lesson starts minimum £500 for 1 hour of our time to teach that, because we did a lot of work writing a white paper that took a lot of brain power. Ain't it, Jerome? I see you there.
Yeah, therefore.
You could hear the stress in his voice. He was like,
He did,
yeah.
he did, man.
Yeah, that white paper, boy. Yo, just understand, Saint Jerome is a mathematician that used to work for the European Space Station. It was that level of maths that was going in to do this white paper. But anyway, as I digress. So what happens? You have a representative transaction. This is model 4, the final full on-chain one. And an investor contributes wrapped ETH. So what is wrapped ETH? That is ETH on a different chain that is been wrapped, basically. So it's like a copy of ETH.
It's like think of it like a stable token, but with crypto.
Yeah. So, and they do that. They send that to Uniswap, a Uniswap liquidity pool, and on the Uniswap app, a decentralized blockchain-based application, which a borrower uses to access liquidity. Now, the investor is a liquidity provider, right? And then this LP token that they get back, which is kind of like a receipt. So think of your LP token as like a receipt. So think of it this way, yeah? That'd be like me giving the Toblerone, and then I get this bit here. I get the barcode. Yeah? So now I've got one barcode. So that now proves, okay, I've got X amount of this token in this. I've got X amount of Toblerone that I've contributed to the pool, because, and in this case, it would only be one, because I've only got one barcode token. If I had more, then I'd get more tokens.
That LP token is basically a representation of the yield as well. It can also be that.
Yeah. So there's loads that you can do with that. So with that token, it represents the ownership of the underlying asset and is controlled by the enforced on-chain. So just like the example I just gave. Yeah. So the value transfer, investors deposit wrapped ETH into the pool or exchange LP tokens through smart contracts. So I would exchange my LP tokens with Quiche to get his Toblerones, or he would send me. We would create a smart contract saying, "I'm willing to sell this at this price for 100 USDC," and then he would then get my Toblerone tokens, and then be able to make the claim back to get the actual asset. If that makes sense.
Yeah.
Hopefully that's made sense. Yeah. So that would be like, think of it this way. Yeah. Let's say, for example, someone bought 100 pairs of Jordans. Yeah. And they had 100 receipts for those 100 pairs of Jordans. If you bought that receipt off somebody, you've now got that Jordan. Yeah. You can either go and take the Jordan back to JD and get your money. That's basically the same process that's happening. So yeah, it's just been overcomplicated and changed the words for no reason. But that's what happens in finance. So, and especially in crypto. But yeah. So how the spectrum affects market participants. This is my last page. Oh no, I'm done.
Bro, you've been done 10, bro. Come on, man. You blasted past 10, bro. We're on 18.
Oh shit! Sorry, I got a bit too into it. Sorry.
Yeah, man, it's cool. I would like to cover this one, man, if that's cool in Ninja. Cause this is where it breaks down the effect.
Yeah, no, go ahead.
All right, amazing. So, yeah, this is the implications of the spectrum on the market participants. So, what we're looking at here on the right side, we're looking at the asset owners, investors, and service providers, right? So these are the platforms, these are the people putting money in, and then these are some of the people that are owning the assets and sitting on the capital and the tokens, etc. Right? So we're going to now look at the opportunities and risks in all of these different categories at the top, right? So we can have a clear understanding of what are the benefits and what are the downfalls of these different things at the top there. Cool. So if we're looking at the transparency of public blockchains, as an asset owner, the opportunities basically highlights the financial health in the markets, but there's heightened scrutiny of holdings, which is the risk, right? So the same thing with investors is reduced information asymmetry. So within the opportunities, there's reduced information that basically they don't have to put out as much essentially. And then also on the risk side of stuff, they've basically exposed their competitive advantages. They may have exposed their competitive advantages. If we're looking
or
at
expose themselves to arbitrage on a
yeah,
high level.
exactly that. So if we're looking at that for service providers, they have a decreased demand for new roles and services on the opportunity side of stuff, and on the risk side of stuff, the disintermediation of existing functions. So cool. The risk is their functions basically not running and working properly, and increased demand for they basically have a high demand and high throughput of different things that they are capable of providing and giving to the other people that are utilizing the platform.
Yo,
Cool. Yeah,
I got to interrupt this real quick.
go ahead,
Because
bro.
I just clocked that the GOAT is in the building.
Wait, who's here?
I just
Oh
clocked.
my god.
Man, like Debs is in the building.
Man, like,
Jeez!
Debs is just chilling there. Didn't even clock. Man, like the GOAT. The goatiest of goats. Man, the big Billy Goat is in the building. Okay, so if you want to know who we're talking about, we actually do have an episode with Debs. Highly recommend you go and watch this. Highly recommend you go and check out Stock Pickers Academy. All you'd have to do is go onto YouTube and type in, you know what? In fact, I'm going to do everyone a favor. Keish, if you carry on, I will put the episode in the chat. If you carry on.
Cool. Okay, cool. So new or expanded market potential. Let's have a look at that. So on the asset owner side of stuff, the opportunities is access to alternative sources of liquidity, which is huge as well. Even if you're looking at businesses that are not typically on chain, they have the capability of basically having access to more capital and liquidity by being on chain as well. Like we said, with all of the liquidity and access that is across DeFi, through tokenization they can then add another layer to what they're doing. I had a quite interesting conversation today with a business discussing exactly that, how even looking at some DeFi plays may actually increase the amount of capital that they can utilize to then essentially get more client base, and it's like an endless cycle there. So that's a huge advantage. But the risks now is lack of liquidity or neutral buyers of the assets. So then yeah, that basically is dependent on what market you're expanding into, and also what regions are there the most buyers and sellers. So that really depends on your market sector.
You know what I want to add here?
Go
This is
ahead.
what I want to add that some people don't think about. So obviously the property market is a very liquid market because there's loads of people looking to buy property. However, not everyone's looking to buy your property. Mic drop. Just thought I'd leave it at that. Whereas when it comes to Apple stock, when it comes to tokens, guess what?
There you go.
What property? They're not coming to look at your yard. They're not coming to do a house viewing. They're not getting the surveyors in. They're just going, this is the asset that I want. This is the that I want.
Yeah.
Simple.
Exactly that. So if you sit with that and that's in a pool, it's synonymous. It doesn't matter. If they need it, they're going to utilize it basically. Cool. So on the investor side, when it comes to new or expanded market potential, the benefit and opportunity side is that they have enabled or augmented access to investment opportunities. So this basically when the market's expanded and there's new potential, then for investors there's incredible and new investment opportunities. The risks are inefficiencies relating to the new markets. So that's basically obviously the risk of a new and emerging market and them jumping in ahead. They're taking that sort of risk there, which is cool. Cool opportunities, increased demand for new roles and services. We see a little trend going on here for service providers, right? They got quite high demand. And exactly the same as well. So disintermediation of existing functions. So as you can see for the service providers, it looks like across the bat they have the same sort of opportunities and problems. So it's what it looks like. It is just an endless cycle of creating new and existing products and developing on that in order to keep the user base basically up to scratch with what's going on here. So that's what it looks like here. So let's have a look at managing financial relationships via smart contracts. Oh, this is very interesting. So for asset owners, this is reduce operating costs. So if you're looking at smart contracts as a whole, I think a lot of people, once they understand how they could utilize it in business, in any sort of transaction, it's literally a contract that can be written in any way, shape, or form, utilizing code. This also can reduce operating costs and also allow you to automate a lot of your systems when it comes to business and getting stuff done. So I think we're going to see a lot more use cases of smart contracts in that way. I think a little bit in the traditional world, there's a little bit of that's been happening because I know blockchain technology has been used from early, but I think I think that people need to be able to utilize smart contracts in a smart and effective way to just create what they want exactly. So if there's anything happening in the real world, like Mike has a car that I want to buy, or them Toblerones from earlier, Mike has a Toblerone and I want to get some of that. Then we just simply write up a smart contract, and then there's some sort of payment plan or agreement and terms set with that, and then the smart contract can execute on that. So this is a very smart way to work. So yeah, this reduces operating costs. If we're looking at the risks, so there's basically operational risks, technological risks from that perspective. Okay, cool. So moving on and looking at investors, the opportunities here is the same thing, reducing operational costs for investors as well. And then the same thing is the technological and operational risks. So essentially, just literally solely trusting the smart contract, does that take away from the actual roles and responsibilities of what is actually happening in the real world, essentially? So if we're looking at the service providers, like I said, again, it's going through the same issues of the platforms, but on the smart contract side, I think what's important to understand when it comes to managing financial relationships, it's really the contracts that are in place have to be secure and also very, very highly functional. So a platform would definitely be running through a lot more transactions than just an asset owner, for example. Maybe an investor might be doing more larger transactions, etc. But platforms may be doing smaller payments and be running a lot of them, so they have to be extremely secure. But yeah, if we're looking at the regulation aspect as well, so if you're looking at the asset owners opportunities, is clarity. So for asset owners, obviously it's public on the blockchain, and everything's recorded, etc. So everything's quite clear. We can see that across the board, which is good. Risks here is discouragement. Okay, moving on. Yeah, all the risks here are discouragement, which is kind of it's quite funny in my in my opinion. But yeah, on
have a recce, because otherwise he's not gonna get to do it. And he was the one meant to be doing this whole presentation.
sorry, Ninja.
We
Yeah,
hijacked
yeah,
the
yeah.
whole.
Yeah,
Okay,
you,
cool.
you want me to take over?
Yeah. We jacked you in it, so
No, it's all good. It's all good. It's all good. All right, so we're on from page 18, yeah?
yeah.
Let's
Yeah,
go,
go
let's
ahead.
go, let's go. To be fair, there's only a few, like the main juice is in the first part of the report. But yeah, good cover, guys. Right, we're on. Yeah. No, of course. Yeah. So in the on-chain integration and on-chain enforcement models, value transfers occur both off-chain and on-chain. So asset owners must use traditional banking infrastructure and service providers in addition to have on-chain capabilities. So I think this is kind of like I think this is what I would call Web 2.5. Um, the combination between TradFi and DeFi. And the thing is just because it's on chain doesn't mean that it's decentralized. Because remember, there's decentralized blockchains and there's centralized blockchains. The just because it's blockchain doesn't mean it's decentralized, and just because it's blockchain doesn't mean that it has to be completely anonymous. It can be blockchain, centralized, and KYC'd. It's just the good thing about the blockchain. Huh? Oh yeah, because yeah, it's not DeFi, it's not TradFi. It's like I guess you could call it NewFi because it's new finance, isn't it? It's not traditional, huh? Right, I don't know what fi to call it, okay, but it's definitely not DeFi because it's not decentralized. But I do think, huh? Yeah, well, anyway. Um, so in a fully on-chain environment, value transfers occurs on-chain. The main driver of on-chain is transparency and immutability, not necessarily decentralization. Okay, so unifying the on-chain integration, on-chain enforcement, and fully on-chain models is the use of tokens, for example, Ethereum and Bitcoin stablecoins, in the transfer of value, which may allow asset owners to bypass unfavorable means of exchange and local currency dynamics. Okay, so there's a reduced intermediation cost, but exposure to novel idiosyncratic risks. So look at this. By moving towards digitally enabled token models, small contracts become a material factor in financial relationships. Material factor because it becomes I guess you could say, the smart contract then becomes the driver of execution rather than people's word, right? Because that's why they call it trustless. Because we want to move into a world where things are automated. We don't rely on human effort; it just happens. This represents an evolution of transactions today, which are characterized and enforced by off-chain agreements, because obviously people's word is not necessarily bond. Accordingly, asset owners may be able to reduce the transaction cost through the use of smart contracts. Of course, you can reduce transaction costs because. Sorry. Yes, because less human resources. Yeah. Uh, shout out to our legal advisor though. She's all right. She will not be replaced by a smart contract anytime soon. Smart contracts as both complement and a substitute for traditional legal service. By moving to smart contracts to enforce financial relationships, an asset owner is vulnerable to the novel risk posed by using smart contract logic, including hacks, bugs, and lack of regulatory clarity. That is a downside, obviously. You know, oh, you know what? I have. Sorry, say that again. Now, now, you know what? You know what? I have to bring up a revelation that I had with Jay Johnson today, right? Um, if you think about it, you know how they say not your keys, not your crypto? If you think about it, nobody owns any crypto ever. It's just who knows the private key to that wallet. It's not even a wallet, it's a portal. MetaMask and Trust Wallet is not a wallet. You don't hold crypto in the wallet. You have access because you've got a private key, and those cryptos, let's say for example, I've got Ethereum in my MetaMask. The only reason there's Ethereum in my MetaMask was because somebody else or me and my other wallet decided to send Ethereum from this wallet, which should be called a portal, mind you, if you really think about it, because it's not holding anything, it's giving you access to something. Ethereum from MetaMask B, let's say MetaMask B is my friend's wallet, sends Ethereum, my friend who's got MetaMask B, sends it to my MetaMask, which is MetaMask A. It's not like the crypto is inside my MetaMask. It's just that the crypto is assigned to my wallet address because that's the command that MetaMask B sent. Can't trust anything. This is another thing that the people don't understand, right? So, like, Jay received a notification on his phone, and it was a Coinbase notification, like Coinbase wallet notification. This literally happened today. And then I just thought, oh my God, I knew you could do this, but I don't do it. Think about this, right? You can have the same, you can have access to the same crypto via three different wallets. You can access the same crypto via MetaMask, Trust Wallet, and via Exodus, amongst other wallets, as long as you just enter the same seed phrase. Then you've got three wallets that have, but that's why they're not wallets, they're portals. You have three portals to access the same crypto. How crazy is that? It is not a wallet. It's a portal. I'm calling the portal from now on. Anyway, um, crypto assets. Yeah. Anyway, um, so investors benefit from increased accessibility as they look for opportunities closer to digital narrative, and obviously, if things are on chain, it just means it's a 24/7 transparent market. Further, tokenization enables the fractionalization of assets in a flexible and programmable manner. So, for example, like 10 people could contribute towards a housing block, or 100 people could invest in a skyscraper. That makes sense. And everything's just mathematical and transparent. So that makes sense. Lastly, traditional financial. Oh yeah. Well, this, yeah. This is my favorite thing in the whole report. Additionally, especially for nighttime people like me, additionally, tokenized assets present investors the opportunity to engage in a 24/7, 365 trading environment with relatively instantaneous settlement, clearing, and delivery. Lastly, traditional financial products in almost all cases incorporate some form of permissioning, e.g., KYC, know your client, anti-money laundering, AML, geo blocks, wallet wireless verification, investor accreditation checks, minimum wallet balance requirements, etc., which may limit certain investors from accessing a particular financial product, because obviously a lot of the world doesn't have any documents. Okay, so moving towards the digitally native side of the spectrum offers a potential for permissionless financial products. Let's go through here. On-chain data with respect to on-chain representation and on-chain integration models are almost certain to be lacking full transparency. Alongside the status quo, these models rely periodic reporting versus real-time and are often developed manually or with limited technology. The on-chain integration model deployed by many tokenization infrastructure protocols has attempted to reduce information asymmetry through on-chain reporting. However, monitoring and reporting for this model has been imperfect to date, leading to low levels of transparency into underlying assets of investments. So the fully on-chain model is the most resilient against the cumbersome processes and offers higher relative transparency than other models. It should be recognized that while reduced information asymmetry may offer asset pricing transparency for investors, it may also stomp out competitive advantage. So there's been increased regulatory, tech, and operational risks. More conventional financial relationships may be less vulnerable to regulatory, technological, and operational uncertainty than those that are digitally enabled. This dynamic will certainly evolve with time. Trying to find where's the alpha? Let's get through this. So let's go to the concluding remarks. As blockchain tech and associated services evolve, we foresee ongoing experimentation in the tokenized asset finance. With time, we will see new examples upon every degree of spectrum, offset by, I don't even know what that word means. Attrition? Anyway, the spectrum was developed with sustainability in mind. Ambitiously, we intend that all existing and future financial relationships can be categorized via the spectrum. We would like to thank Charlotte Dodds for editing this piece. We got Charlotte. Big ups to Johnny, Martin, Alfred, and Vincent. And if you want to add these guys on LinkedIn, here they are.
Yeah, Alpha, man. That was a big one.
Let's go to the bigger Alpha. Let's go to the website.
For sure, I got that.
Who's doing it? Me, you? Who's got it? I got it.
I'm on it. Watch this, lads. Yeah, gonna go on like this. Yeah, you see this right here? You go like that. Yeah, you do the copy little thing. Yeah, you go like this. You go like that. You go wing. It just takes you there. Look at this. Bing. Beautiful website. Look at this beauty, lads. You ready for this? Yeah. You keep scrolling, yeah. And when you keep on scrolling, you're gonna figure it out. Look, you're gonna figure it out. The resources, see the dashboard. Company. You ready for this? Boof! We're in the dashboard now. Look at this. We're looking at the world, all over the globe, lads. Yeah, we're all over the lads. Look at the
$571 million of active tokenized loans are happening right now.
But look at this right here. 4.5 what? That's not milli. That's what?
That's billion.
That's billy right there, right? And look at the APR on average. Is that real? Every year, 9.9% a year. Serious?
Mad.
Wait. If this company's charging people 9% and they've loaned out 4.5 billion, that means the profit is like half a billion.
Probably. Yeah, well, that's right. Loan value. That'd be right.
Yeah. There you go, right there. So if we're looking at this now, look at it spread out into different industry sectors. Carbon project. We need to. That's a separate episode of the game right here. Consumer market, crypto trading, fintech. You can see 100 mil.
It's interesting that real estate is the lowest, one of the lowest.
Yeah, real estate's looking at the lowest. Really, majority of it's fintech. Yeah. Interesting. And consumer.
That there's more auto loans going on than real estate.
Yeah, that's very interesting.
Very interesting. That in itself is alpha.
Look at the
region.
Wait,
guys. You know what I've just done. Right. So let's just define these figures. So active loan would be like the loans that are active right now. That seems what the understanding is. Total loan value. I think total loan value. Sorry, go on.
Look at it, bro. There's only one loan here. That's 20 mil right here. There's only one loan here. That's these are the different regions.
How the hell have you got the same amount of realized tokenized assets in Sierra Leone as you have in America?
Yeah, there's definitely some rich people parked up there. But what
20 mil here. And
Go on,
there's
Yeah,
carry on
so
with your Alpha Ninja. Carry on.
yeah, so active loan value will be the loans that are happening right now. Total loans value, I think, is the loans ever. So I'm assuming about 3.9 billion of loans have been paid back, which is amazing. If they've got 9.39% APR and everyone took 1 year, obviously that's hundreds of millions. But then what's also mad is look at the total loan value, 1785. If you divide the active loans divided by 1785, that means the average person or the average company is taking out a $320,000 loan. That's a huge loan. That means there's no small fish that
And
they
they're
deal
doing
with.
that. And again, they're doing that not even with property. They're getting 300 grand loans off cars, tech, all sorts of shit. That's mad.
consumer
Of
market, yeah.
tokenized real world assets, yeah.
Okay, here's the Alpha. Here's all the coins we want to be looking at.
Yeah. These are the protocols. Boom. I can just go straight into the protocol like that. And die, boy. But hold on now. Before we do that, what's the yield? Boom, 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 boom.
Yeah, change it so it goes lowest to highest. Just so we can let people know. Now on the yield. Is it 13%? Average. That's okay. Let's go to average rewards APY.
2%.
Okay. Interesting. This isn't what we found before.
I know. You found this,
Oh,
right?
Here we go.
Yeah.
Yeah. Look
Yeah,
at
this we
53%.
Yeah. What type deal? It's an open deal. What's this? Deal open on performance fee, 5% for performance fee. So they charge 5%. You put in 21 grand, looks like.
Yeah.
Yeah.
Mad.
That is interesting. Issue price $1. You can put up $1, you know, that's crazy.
That's mad. You can put up $1.
It looks like it, yeah. It looks like if you look at the issue price, yeah, $1.
That's mad.
What did everyone notice about those countries as well?
Oh, bro,
Actively
go
using-
back to those countries. There's a list where it shows you the countries on here. Go to the list. There was a list on here.
It's not
We
down
showed
here.
it.
Right?
Can't remember. There. Oh my god, the alpha in this is
Mhm.
crazy. Go to that list of countries. Keep going down.
Yeah, here it is.
Yeah.
Boom. Look. Kenya, Nigeria, Philippines, Mexico, Uganda, Peru. US is all the way down here.
So to
And
me,
yet,
that's
this
saying
is the jokey swing, yeah. You got all these Americans trying to go to Africa to teach people about crypto.
that's it.
Now look.
Yo, it's actually mad. They're so ahead. It's not even one of
Look
these.
at the average deal size on these 12 deals.
5 mil.
6 mil.
Mad.
5 mil on 14 deals. Average deal size.
So
Mad.
in the West, those
Look.
countries are called the global South in the West.
Carbon projects, emission projects, consumer and fintech. You can see the look at that.
Auto in Kenya.
Yeah, auto in Kenya.
So people getting loans against their cars.
SMEs in Philippines.
Mad. So people getting loans against their businesses
Agriculture.
in crypto. Oh
Agriculture
my
in Mexico.
god.
Agriculture in Mexico. Energy, fintech, healthcare, real estate. Boy.
Bro, the UK is just thinking about doing tokenization of property. We're just talking about that.
Where they at? They're not even on the list.
Guys, you know what I recommend everyone learn to do? Right. I don't know if Miss House gonna disagree with me or not, but me, I said to myself this year, at the start of this year, one of the things I'm gonna do this year is I'm gonna try to practice as much as I can. just to learn, right? Like, I think following this episode, if you're watching this episode and you've never taken out a DeFi loan, just for learning purposes, I'm talking like 0.03
This is not financial
Ethereum.
advice.
Yeah, not financial advice, like a tiny bit of ETH, like $80, $100, yeah, in your MetaMask. Go to Aave and look how easy it is to give Aave some of your Ethereum to hold, and you take USDC or USDT to the value of, I think, 50 to 60% of the Ethereum price. So, like, let's say you got $80 to $100 worth of Ethereum. You can, at the snap of a finger, get yourself $40, $50 of liquidity. Now, obviously, Aave do keep your Ethereum, right? And you got to pay back the loan, but like the loans are super cheap. Like they're like 5% APY. And if you're a good investor or trader, theoretically, you can outperform your loan, pay your loan back, and get your asset back. And once people go through that process of taking a decentralized finance loan, I've taken lots of loans in the past 2-3 months, and now I really understand. Not just on Aave, but on other chains as well. Over collateralized loans on the blockchain make so much sense. It's disgusting.
Yep. It makes
because
it
it's easy and
completely makes
transparent.
sense. Yeah, it makes sense because it's transparent. There's a smart contract, and they're giving you less than you're giving them. So that means that you desperately need the liquidity. So you're not gonna not pay the loan back.
I don't think it
It
means
makes
somebody's
sense.
desperate if they're getting a loan. I don't think desperate is the right word.
Not desperate.
You can be
but
smart.
yeah. You're either really smart or really desperate.
Yeah, I believe majority of these are.
Okay. If you're
smart.
desperate, please don't take an over collateralized loan. You lose your asset.
Yeah. There you go. But yeah, man. I think it's very interesting.
I want to touch on what Saint Jerome was saying again. Drop them bars again, please, bro.
Right. So I was saying these countries are classed as the global south in the West. Now, this goes to show the state of where the world is going. Because if you look at these countries, and now if you look at what you need to do to take a traditional loan, and if you look at what the people in these countries may have limited access to get traditional loans, and look where they're turning to, and they're having success in turning to this type of loan, that just goes to show where the future is really for these people that can't get traditional loans, where they're all going to. And look at the countries. A lot of these countries, population booming as well. A lot of the populations are underneath 30, 40, young populations, and very, very techie populations. So I think this chart is an indicator really of the world by 2050.
Yep, 100%.
Yeah, because
And
they're
we've said it
sitting
a
on.
million times. Nigeria is going to just murk every country in the next 10, 20 years.
Yeah.
They're devs. This is inside information, from a lot of companies that I've worked with in the blockchain space. They're all telling us the most amount of active devs and the best devs. They're not actually coming out of India anymore. They're coming out of Nigeria.
Yeah.
Mm-hmm.
Do you think part of that is because of Nigeria limiting $30 to $40 withdrawals, and then people naturally become more interested in crypto and Bitcoin?
Yep.
Yeah.
You got no
100%.
choice. It's not with Nigeria, it's different. Every other country in the world, or most other countries, are using crypto because they want to. Nigeria, it's because they have to.
Yeah.
100%.
But yeah, also if you look at these regions as well, they sit on agriculture, they sit on energy, they sit on majority of consumer products and resources and things that countries are needing. So getting a loan is not very difficult because it's backed by physical things. You got trade, you got shipments going in and out of these countries. So this is also something to bear in mind here.
Yep. So we're looking for, if you're from Nigeria and you're watching this, we are looking for you because we would like to franchise Blockchain Sensei into Nigeria. In fact, you know what this highlights? This highlights all the countries we need to be in.
Yeah.
That's what it does. This says this is where we need to be. This is where we need to focus our time and energy.
Yeah.
Wait, why do you think Kenya's got so many loans?
Kenya, I don't know.
What's
I've got
going
no-
on in Kenya?
I don't know what's going on in Kenya. Yeah, we need to find out though.
Carbon emissions, so renewable energy projects, fintech, and automobile projects.
See what the Indonesia one is?
And
Indonesia's the
Fintech and SME.
yeah, fintech.
Interesting.
Yeah.
well,
Very
Nigeria's Indonesia and Nigeria are gonna swap places in terms of population because Nigeria is number 5 most populous and Indonesia is number 4, but Nigeria's having more kids.
I
So
tell you what's
they'll
interesting
become the 4th biggest.
is the amount of repayments in comparison to everyone else. In Mexico, it's 67 repayments. Which is mad. But anyway, that's that episode. We hope you've taken value.
Reports on reports on reports.
Ain't nobody out here doing it like us. Let's get some questions and wrap it. Oh
baby.
So, but I don't think we've had you in our calls before, Robert. I hope you've taken value.
Yeah.
Nope, no fan from Robert. Thank you for joining anyway, Robert. Debem, thoughts, comments? What do you like?
No, very interesting. Very interesting. You mentioned about Nigeria. That's where I'm from originally.
Is it?
Yeah.
You know, I didn't know he's Nigerian.
You know how blockchain sensei works? We like hiring internally.
Really?
That's mad that I put it out there in the universe like that, and the Bem's just like, yeah.
Yeah,
I'm Nigerian.
That's very interesting about the whole devs. I know they're very much into that.
We might have to send you. Do you speak? What's the language in Nigeria? No,
Quite a lot, you know. There's like 3 main ones: Igbo, Yoruba.
That's it, Yoruba. Do you speak any?
Igbo.
You speak Igbo? Okay, cool. All right, we might have to send you on a little trippers.
Yeah.
To do some research, find out what go on there.
Yeah.
Yeah.
That's interesting. No.
We'll talk.
All right. Well, great session as always, though. Great session.
Thank you. Next, St. Jerome.
Yeah, man, interesting report. And yeah, like I put in the comments, where I work, I won't mention the name, but it takes 4 to 6 weeks for assets, for equity to settle, and it takes 8 to 12 weeks for funds to settle. So that's even a guy today was like, this is 21st century, man. Why is it so slow? You know, so again, this is yeah, man, this is the future again in that sense.
Wait. Let me just get this clear. There's big millionaires that got their money and they can't get it out or can't get it in for 12 weeks.
Yeah.
It's like a long way, that.
If anyone has that problem, send them my way.
I'm taking the piss for 12 weeks, bro. There is no way.
Millionaires are having a problem. Get in touch.
There's no way that they're not doing something with that money for 12 weeks.
Yeah, I think customers clock it. They're like, are you like just earning interest on it or something? But it's a legacy system, right? So it's a legacy system. So people have to put up or show up with it. But with these new options coming up, these new technologies coming up, I mean, yeah, it's gonna change the industry,
whether they like it or not.
That's it.
It's one of them, isn't it? It's like people trying to sell house phones when people got mobiles.
True.
Not really trying to only take phone calls in my house if I can go outside. You know what I mean? It's just not really. It's not really a that thing, bro. Like, who really uses the house phone these days? It's mad. Bit peak still. A side note, you managed to have a look at that research thing that I gave you, the little thing.
Which thing?
It begins with GB.
Yeah, I had a look at that.
You had a look.
Yeah.
You're looking good.
Yeah.
Yeah, it looks interesting actually. It's been around since 2020, so that's very
Okay.
They must be doing something right.
Now I want us to have a deeper dive on it. Innit? I'm not going to do an episode on it because that's too much alpha. Because if this thing that we're talking about, guys, is real and it actually works, it might have broken the whole entire global financial system.
Yeah, just another day on the game.
You think I'm joking, but I'm actually being Drum. And I'm not gassing.
Yeah, no, that's it's interesting, the G thing, definitely. Yeah.
It's very interesting. You know the thing they call the game, the G thing. Very interesting. It might just break the whole financial system.
Ain't nothing but a G thing. Matters. All right, cool peeps. Keish, do you want any last comments, last thoughts?
Yeah, man. Many blessings, everyone. When it comes to this tokenization thing, now you know. Yeah, man. I think the nice thing about this report was that it breaks down very nicely the understanding of how the traditional world actually bridges into the blockchain space and how they have been from a traditional aspect as well. So yeah, it's really good because a lot of people think everything has to be straight on the blockchain, all on chain, but there's real deals happening where it's partial, and I think that's the way that traditional finance is gonna bridge into the space. So yeah.
Game is and then Ninja.
Yes. So today I lost my. Actually, no. Let me say for better words to be appropriate. I bridged Ethereum I bridged USD for the first time on RWAxyz, and I'm currently testing out decentralized leverage trading on GMX. That's the update in my little world. So if anyone wants to try out decentralized trading, I found GMX works very well. You just connect with your MetaMask. It only works on a Ethereum or RWAxyz, so you have to bridge your Ethereum assets onto there. Got some dollars on there, trying things out. Might work, might not, but it's my first time decentralized trading with something that has leverage and sell orders and spots, etc. So, especially with and finally Binance. We did not talk about Binance, but I have taken all my money off Binance pretty much. So be careful, guys.
Yeah, that was a thing, innit? We didn't even discuss that one. It's the game. How can we not talk about the Binance guy? This guy is basically just ripped off his face and put someone else's face in place of him. Basically, that's pretty much what's going on here. But like I think we said this a long time ago, man. What they did was in the traditional world, in the stocks world, it's illegal to have the ability to understand every single trader in the whole space and then create a token and then be able to literally manipulate a platform that everyone uses to push it. Well, yeah.
Yes, sir.
You just give out too much
Oh,
game, man.
I know.
that was an amazing
Anyway,
episode.
many blessings, guys. I got to shoot, but yeah, big love.
All right, see you guys on Friday. NFT Fridays. What we got for NFT Fridays, Mr. Harding? That's already pre-planned.
Yeah. I gave you the little thing that we're gonna DPs on that one.
Yeah. All right. Cool. All right, take care, guys. It's in a bit.
Bless-
Yeah.